Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to review some simple concepts again and just the importance of repetition, signal days, sitting on your hands and being patient, and then capitalizing when your instruments set up in the session that you're trading coming from your watch list. We talk about 3 days of breakout traders in the markets. First red day templates, first green day templates, the inside day. But the understanding of how those templates can set up, and a signal day can alert us for that week. When a session sets up, it may take a day or two on the backside of the week for that market to coil into a momentum parabolic opportunity. Understanding that you may have a parabolic 3-day template, a 3-session setup, coiling for an explosive move coming from that signal day. We can have short squeeze templates. We've had a couple of those this week already. The low-hanging fruit trend continuation. I might have left earlier from the station in an earlier session, but it's an all-in day, an ACB. It ain't coming back, and that low-hanging fruit trend continuation, page 96, gives us the opportunity to participate in that move. And then, of course, a news catalyst in line with a higher time frame template, the first bounce explosive continuation opportunity on a smaller time frame. But just understanding that templates can take time to set up in your session. So for example, we can have a first green day that can leave in London, and traders in the US session don't want to be counter trending a market now on a range expansion in the closing range of the week. Whether you participate in that is up to you. But the London session traders had that opportunity. The market continues into Monday, closing in breakout before day 2, typically expanding the range. In this particular case, Monday was the range expansion, and Tuesday closes as a first red day. Traders come the next day and they think, oh, I've missed the trade. But we now have markets that are setting up into the backside of the week for an explosive collapse into the closing range and into the beginning of the new week. It doesn't matter what market it is, the same templates can set up, but we can have major high impact news that can affect that, but also allowing traders the opportunity to participate in a news catalyst driven event, whether it's first bounce or first bar, in line with that higher time frame thesis. We can see the front side of a template building on the back side of a week, and the collapse mid-range of point of the week, high impact CPI, but ensuring that regardless of whether that opportunity presents in your session, aligning ourselves with that higher time frame template as it completes on the backside of that template. Traders often just trying to sell the high or buy the low, counter trending the higher time frames, are ways to damage your trading account. And also having the patience and the discipline to just sit on your hands for certain markets to present, as it may take 3 or 4 days for a larger time frame template to unwind for an all-in opportunity. We can see where 1 week ended, a closing range of the week, closing as a first green day, and a market continuing to break out and push higher, range expansions on the front side of the week, and a full-blown blow-off in the closing range of the week, closing as a first red day before coiling into the backside of the week, and a new week beginning, a new timing cycle, and the all-in collapse, taking out where that pump began the previous week. Recognizing that a lot of these short-term swings can be choppy, dangerous, unless we have an all-in catalyst, a 3-session setup, culminating in the blow-off or the reversal opportunity in a market now that has blown off on a range expansion on the closing range of the week. Free Cash Friday for the all-in reversal opportunity, creating the first red day, and then the patience and discipline to not get chopped up in the middle on the inside. False breaks of the inside bar, the double inside days, page 74 in the playbook, and understanding how when we have double inside days or even inside days, how the breaks of these highs into the closing range may have other time frame traders trapped at the extremes on the wrong side of the market. Regardless of the direction, whether it's a first red day or a first green day reversal, and then a market that's coiling coiling after our signal day, again recognizing the signal day, and then a day where the market can rebalance itself and coil sideways into the backside of the week, continuing to expand the range on the backside and closing in breakout. Markets in breakout now may be preparing for explosive moves. First green days. So understanding that the importance of these signal days allows us to have an instrument on our watch list, whether it's a first red day, first green day, inside days, and then the patience and the discipline to allow that template to set up. Trying to trade all the little bars back and forth and read price action and read the tape and structure and all these other things, you're missing the larger, higher time frame template that's driven by higher time frame traders. And then also understanding when you have an opportunity, we have a large signal day, we have the reversal up top, the collapse down, the first green day signal, and recognizing that this may be a session opportunity into the closing range of the week, and it may take time for that larger template to continue in line with the first green day thesis. So we've got our collapse on the front side of the template, the first green day signal, the coiling sideways, and then a session opportunity, perhaps after major red news, closing out the week, a parabolic session trade. Or for traders who are looking to position themselves in the market, potentially holding with a stop in place and a higher time frame thesis driving that move. But for traders who are looking for the scalable coil, the 3-session setup, a fantastic example of the explosive move after major red news in the first hour on a currency pair for a session parabolic 3-session setup, page 37 in the playbook. And also recognizing how high impact major red news beginning a new month can be a catalyst setting up the same type of template, week 1, creating the high of the month, and then the reversal on the back side of the template, a new month, a new timing cycle, high impact major red news, lifting traders up, creating trapped volume up top before the backside collapses into the high impact news release non-farm payroll. So recognizing how high impact major red news can be used to trap volume on the wrong side, and how that template can build over 1 or 2, maybe 3 weeks, aligning ourselves with the low-hanging fruit trend continuation trade if indeed that opportunity presents. And of course, we're going to have days where we have signal days that allow us to participate in an all-in 3-session setup where the market coils for an explosive move and it's not coming back, a scalable rinse and repeat opportunity. These opportunities can happen in the US window, they can happen in the Asian session, and of course they can happen in our London window. Well-engineered charts on the day after a signal day, the patience and discipline, and the understanding of how to participate in that move, manage our risk, and either lock in profits or be willing to hold that position until the close. This is an example of a trade where it requires literally zero management, as we're in a market that's an all-in ACB opportunity. Again, contrasting that with charts that are choppy, even though they're unidirectional, harder to hold on to, less of an asymmetrical risk-reward opportunity, a nail-and-bail type of situation. But again, asking yourself if you're just trying to trade markets or if you're actually hunting specific rinse-and-repeat setups. Markets that would be difficult to put size into and hold on to with all the back and forth auctioning, as we have a day perhaps that's maybe reconsolidating or trading in a trading range, a larger, higher time frame trading range. Regardless if I got the direction right or caught a move, is this the type of market conditions that I want to be trading in? Also recognizing when we have markets that giving us a signal day can offer us a 3-day setup. Wednesday, the midpoint range of the week, 3-day setups, page 31 in the playbook, high of week, low of week opportunities. And when we see this type of opportunity, how should price behave? A tightly coiled market, our universal entry criteria, page 29 in the playbook, allows traders in the London session to capture a scalable, explosive, parabolic move. We have breakout traders in the markets, higher time frame traders potentially now caught down low on the low of the week at the bottom of the range, trapping volume, coiling sideways for the explosive parabolic reversal on Wednesday, day 3, the midpoint range of the week. Understanding on the front side of the week why not to counter trend a day 1 runner. This market is on a range expansion on Monday, the front side, day 1, the opening range of a week, and traders who are trying to counter trend this market on the front side are going to blow out their trading account. But also recognizing how Monday can be a signal day on certain pairs at certain times in the month, and how that trade can build into creating session opportunities into the midpoint range or even the backside of the week. Some traders may be looking to position themselves prior to high impact major red news in line with a higher time frame template. This is an example of day 1, day 2, day 3 reset midpoint range of the week and a continuation of a trending market into the backside of the week. Range reversal on the backside inside of a previous weekly range, and a range expansion on the backside of the week in line with high impact major red news. And why sometimes it's important to have built your muscle memory, because sometimes a first green day is not going to give you a first green day signal, but recognizing where we're at in the timing cycle, the behavior of price, and a new week, how this market could offer traders in different sessions an opportunity in line with the thesis, the higher time frame thesis, where smoke and mirrors may hide the first green day opportunity for traders, but into the backside of the week we have other first green day aligned trade opportunities in different sessions in line with that higher time frame template. And this is a great example of where traders will say, but it wasn't a first green day. Well, sometimes the market is going to play games like this, and it may not show up as a signal on this instrument, but maybe one of the cross rate pairs in line with this instrument showed or demonstrated a first green day signal. And sometimes the only signal a market may give you is that it closes in breakout, and then having an understanding of how is price behaving in relation to the higher time frame template, giving traders the opportunity to participate in an all-in, all-session 3-session setup, culminating in a blow-off. High-impact news can be a catalyst that sets up these type of traps, trap and shift, bring volume up high. This can be a stop hunt into previous volume that is in the money. On the far side of the screen, hindsight pays, we have a first red day signal. Higher time frame sellers driving this move. Lower lows continuing to break down. And then the pump on high impact major red news for the all-in dump into the closing range of the week. And then recognizing when we're in a market driven by higher time frames and not trying to blindly counter trend a market just because we have breakout traders in the market. This is an example of a market that's trending. It's trending front side. We're not just trying to blindly catch the high or catch the low. We wait for a market to give us a signal. So until we get that signal day, if we're trading this market, we align ourselves with the higher time frame that is currently driving this move. The higher traders get in this move, though, market is in breakout, the more vulnerable and susceptible their positions become. We want to position ourselves at the early part of the move, or as that market is coiling for an explosive opportunity for the range expansion into the backside of the week. Sometimes it requires a bit of patience for a market to set up for a 3-session setup in the session that you're trading, and then there may be limited opportunities on this instrument, and not to get caught into chasing moves and reading structure and catching little swings inside, because these are markets inside that are dangerous and can potentially put a trader on tilt. When traders have an all-in opportunity, maybe even a second day trade, expanding the range on Monday, the new day 1, don't counter trend a day 1 runner. Let the market go into consolidation before trying to catch the low, and then recognizing when a market may potentially just be in a trading range and allowing that market to set up and coil for a higher time frame opportunity, or look at other markets that are setting up with well-engineered templates on the day in the session that you're trading. Trading on the inside is low probability, 50-50, catching the low, catching the high. Wait for the opportunity setting up. A lot of traders think they need to get the exact high, catch the high up top. And sometimes that can be an opportunity that presents itself. Or even as it's about to collapse on that first red day opportunity. But recognizing that as this market has now put in a signal day, we have our coiling sideways, our underlying higher time frame thesis is still in place, and how that all-in opportunity can still present itself in a new week, in a new session. Positioning yourself up here could be an opportunity, but recognizing when to hold on to a position or aligning yourself in a new week for the all-in scalable opportunity as that market is about to collapse. Sometimes traders, when you're trying to catch the high, you're missing the larger template thesis in line with a new week, a new timing cycle heading into a new month. Non-farm payrolls week, we have a market that is dumped down, made higher highs, coiling sideways into a parabolic non-farm payrolls release, high impact news, but also potentially a first bounce or first bar opportunity. A larger time frame dump and pump template. New month, new timing cycle, the willingness to sit on your hands and wait and understand exactly the setup that you are hunting. If you're trying to read all the little bars inside and catch moves, you're missing the larger opportunity and aligning yourself with that higher time frame parabolic setup. And sometimes markets may deceive you and just lull you into poor price action type of activity, and lo and behold, towards the backside of the week, maybe just a session parabolic opportunity. But sitting on your hands and waiting, understanding when there is an opportunity present, and not getting caught into chasing little moves back and forth. Allow the higher time frame template to set up into the window that you're trading. And then how should price behave on a well-engineered chart on the day in the session that you're trading? Is it a nail and bail? Is it an all-in opportunity? Is there major red news on the calendar? Recognizing how to position yourself, manage your risk, and where to extract profits from. Simple little measuring, a 100% expansion of the range is just an easy way to extract profits in a parabolic opportunity in a market from low of week back into where breakout traders were triggered into the markets from a previous day. It's important to build your muscle memory, to know when to sit on your hands, understand the larger time frame thesis in place, keep things as simple as possible, know when to lock in the money, and know when to hold till close or hold until you hit a range expansion target. You make money on the days and the setups where it's easy to make money on. Sometimes major red news may delay how a market may set up, but understand where you're at in the template, day 1, day 2, day 3, and understand how that market is setting up on the day. Avoiding days that are just trading in a range-bound market, a narrow range, narrow opportunity type of trading day. And then recognizing days where the market is offering you a gift, an explosive parabolic opportunity to scale into a setup that is about to explode and go vertical. And there'll be other days where the market takes its time setting up in a well-engineered template, but it just doesn't go exactly in the timing window when you expect it. But the same opportunity applies in a very well-defined dump and pump template for a range expansion opportunity. An example again of just projecting 100% expansion high-low of our range as a potential profit target. Encourage traders to be patient and understand that it doesn't matter what market you're looking at, they're all the same. It can be any market. These same signals will apply, and the same templates will set up and build for parabolic scalable opportunities. And in between, if you're taking session trades, nail and bails, 3-session setups, locking in the profits, walking away until the higher time frame ACB template starts to unfold. Keep things simple. Keep things stress-free, zero emotion, zero thinking. Have a plan. Stick to your plan. Don't get caught by movement. Chasing movement is what can get traders into trouble on the wrong days. Look for well-engineered templates. Stick to rinse and repeat setups. Build your muscle memory on templates and setups that rinse and repeat. Keep it simple, traders. Have a great day, and may the markets go with you.